In today's video, we'll cover what RSI divergence is, how to recognize divergence, and how to draw a straight line while executing a trade based on divergence. By the end of this session, any confusion you have about this topic will be cleared up. So, make sure to watch till the very end. What exactly is divergence? When the price action moves in one direction but the indicator signals something different. That situation is known as divergence. Let's break it down with an example. But before we continue, if you find this content useful, don't forget to hit the like button. And if you're new to the channel, make sure to subscribe and turn on the notification bell so you never miss our upcoming videos. I'll catch you right after the intro and disclaimer. Let's understand with the help of an example. Here, we have two examples. Rates price is our price chart, and this is the RSI indicator. For example, you can see that the price goes higher because this low is above the previous low, hence, this is a higher low. At the same time, if you look at the indicator, it is making a lower low because this low is below the previous low, hence, this is a lower low. So basically, this is what we call divergence. Now let's look at the second example. Here, you will see that the price is making higher highs and higher lows, and at the same time, the indicator is also making higher highs and higher lows. So, both are moving in the same direction. This means there is no divergence, right? Now let's talk about the types of divergence. There are two types of divergences: bullish divergence and bearish divergence. The formation of bullish divergence happens like this. During a downtrend, when the price is making a lower low, but at the same time, the indicator is making a higher low, we call it a bullish divergence. Let's understand this with the help of an example. You will see that the market is in a downtrend, continuously making lower lows, but if you look at this point, the price makes a new low here, and at the same time, the indicator forms a higher low. So, there is a difference between price and indicator movement. This is bullish divergence. It indicates that the ongoing downtrend might be losing strength, and the market could start moving upward from here. Remember, bullish divergence forms during a downtrend. Now let's understand the formation of bearish divergence. During an uptrend, when the market is making a higher high, but at the same time, the indicator is making a lower high, we call it a bearish divergence. Let's see an example. Here, the market is trending upward, making higher highs and higher lows. But if you look at this point, the price is still making a higher high, while the indicator is forming a lower high. This is bearish divergence, which indicates that the uptrend is losing strength, and the market could move downward from here. Remember, bearish divergence forms during an uptrend. So, up to this point, we've understood the formation of divergences. Now, let's see how we can trade divergence by combining it with price action. Remember, you should never take a trade based only on a single divergence. You must confirm it with other tools like trend lines, breakouts, and support, resistance levels. Let's see how to draw a trend line. Here, you can see the price is moving downward. If you look at the RSI, it's moving upward from this point. But after that, there is no clear trend visible. If you look carefully, we can draw a trend line here, something like this. If this trend line breaks, we can use that as confirmation for our trade entry. We have two confirmations. First, the RSI divergence, and second, the trend line breakout. If both align, we can enter the trade confidently. Let's look at an example. Here, the market is in an uptrend, but if you look at this point, the price is making higher high, while the RSI is showing a lower high, indicating a possible reversal. Still, you should not enter a trade based only on RSI divergence. If you look carefully, we can draw a trend line like this. Once the trend line breaks, we can take our entry based on the breakout confirmation. That's it, traders. Thanks for watching this video. Success isn't loud, it's quiet, disciplined, and built behind the scenes. If this video gave you something real, hit that like button. If you're new here, subscribe and turn on the bell so you never miss the next drop. Keep your focus sharp, your energy clean, and your goals louder than your doubts. The grind never stops, it just gets smarter. I'll catch you in the next video.